And it seems like it's a given now that it's going to be a September rate cut by the Fed. Looking at the recent jobs data, I think now it's a matter of quantum, whether it's going to be 25 bips or is it going to be 50 straight away. What is it that you're penciling in?
Well, I think we're going to have to see, just wait a few days. On Wednesday and Thursday, we're going to get the PPI and CPI for August. They could be on the hot side. If they are, then I think we're going to get 25 basis points. If they're not, and they're surprisingly cool, then we could possibly get 50 basis points. But the Fed has to be concerned about creating financial instability. These lowering interest rates may not do much to help the labor market. We've got a shortage of workers because of successful blocking of this migration into the country. And then, of course, there's increasing deportations. And there's really nothing that lower interest rates are going to do to change that. On the other hand, lower interest rates could very well cause the market to go up faster, or even in a melt-up situation. And that would not be a good thing.
Well, indeed. But Ed, along with that, there are some experts also flagging off that this particular data and the revisions in the job data is actually a signal that the economy is weakening, whether that is on the way to the recession or it's just weakening. But that is something that is a bit concerning right now. What are your thoughts on that, Ed?
Well, we've in the second quarter, we had a nice rebound in real GDP, and it was revised upwards, actually, from 3% to 3.3%. We currently are running the third quarter around 3%. That may very well get revised down because of Friday's employment report. But the economy is still growing. I think what we're seeing here is increasing productivity. And that's a good thing because I think the technological revolution that we're in, the digital revolution, including AI, is in fact already showing signs of really boosting productivity. And productivity allows for faster growth. The question is, how do you get faster growth if the number of workers isn't increasing very much? And the answer is real wages. Wages divided by prices, real purchasing power, actually gets boosted by productivity. So productivity makes everything better. And I think that explains why the stock market's been doing so well.
Oh, yes, but along with that, Ed, what is the sentiment building in for the emerging markets, and especially India as well? Because, yes, a lot of global cues to watch out for. But for India, there are so many triggers that are working in favor. Just today, we had the comment coming in from President Trump and even Prime Minister Narendra Modi, where they both are indicating that the trade deal is likely in the near term. We have that whole GST reset that has happened. I'm not sure whether you're tracking it closely. But overall, what sort of a sentiment is shaping up?
Well, I think we are seeing that Trump's tariffs have created a lot of turmoil, a lot of uncertainty, but I think it may take some time, but things do get straightened out. And the geopolitical relationship between the United States and India is clearly very, very important to the United States. And it just doesn't make sense for us to have a policy that alienates India and pushes India closer to Russia and China. And we just saw that Modi went over to China and participated in kind of a conference of countries that are not that happy doing the bidding of the United States. So I think Trump is trying to get things back on track. And if that's the case, then that is a positive for India. At least it's not a negative. I think that's really the issue. If we were to proceed with exorbitant tariffs on India, that would be clearly a bad situation. So I don't know that the stock market rises dramatically on that news. Maybe it'll be a relief rally for a day or two, and then you get back to the fundamentals, which include the fact that India is not a cheap market. It's had a heck of a run.
It has had. Ed, thanks for your time. Good speaking with you as always.
Thank you.
Okay, well, talking about India, although in the interim, at least at an index level, we seem to be stuck